And it's the first show for the year for Business Incorporated Live, coming to you from Channels HQ right here in Lagos. Here's what's coming up. The National Assembly passes 2024 budget over the weekend, meeting the December deadline with an increase of over 1 trillion naira. And as 2023 comes to an end, we get personal finance tips to help you navigate 2024. Plus, in Kenya, consumption taxes growth declines to an 8-year low. Welcome to the program. I'm Lottie Williams. Well, it's a new year, and Business Incorporated is now bigger, incorporating our business morning slot. So now, Business Incorporated airs 1 p.m. to 2 p.m. weekdays right here. I'll be covering markets in Nigeria, global markets, crypto markets, commodities, business and economic conversations that set your agenda. So it's 55 minutes of business-packed information for you. So tell your friends and tell your business associates about our new time slot. There it is, Business Incorporated. Airs 1 p.m. to 2 p.m. That's 55 minutes of business. All right, let's get the stories that set your agenda now. Let's get the top stories that set your agenda this time. We see crude futures lost over 10% in 2023. That's in a tumultuous year of trading marked by geopolitical turmoil and concerns about oil output levels of major producers around the world. We see Brent crude, that was on Friday, the last trading day of the year, settled at $77.04 a barrel, down about 11 cents. You see US WTI crude, that settled at $71.65 a barrel, down 12 cents. About 0.17%. We see both contracts slip more than 10% in the whole of 2023 to close out the year at their lowest year-end level since 2020. We know 2022 was the year for the oil market, but Brent had climbed 10%, WTI by 7%, last year supported by supply concerns following Russia's invasion of Ukraine. So we see geopolitics there impacting that market. To other stories now, right here, we see power distribution companies have denied reports of electricity tariff hikes beginning from today, January 1st, 2024, confirming that the Nigerian Electricity Regulatory Commission had not issued any directive for such. It can be recalled that there were reports the power distribution companies were planning to hike electricity tariffs from today, a development that was neither confirmed by NERC nor the Federal Ministry of Power. But right here, it's a developing story. We will be tracking to see if there's any changes to the cost of power going forward. So keep watching those meters while you're vending. So now to investment attraction. We see data from the National Bureau of Statistics shows Nigeria's capital importation dipped by 43.55% to $654.65 million in the third quarter of 2023 compared to the same review period in 2022. MBS noted that other investments ranked up, accounting for 77.56% of the total capital importation in the third quarter of 2023. Followed by portfolio investment with 13.31% and foreign direct investment with 9.13%. According to data, Lagos State remained the top destination in the third quarter with $308 million, accounting for 47.18% of total capital importation, followed by Abuja with $194 million and Abia State with $150 million. The capital importation by selected banks, Stanbic IBTC Bank PLC received the highest capital importation into Nigeria in the third quarter with $228 million, about 34% of all that was raised. And by the end of January, January 2024, micro, small, and medium enterprise owners will be able to apply for loans with a 9% interest rate from Bank of Industry, and that's according to the Senior Special Assistant to the President on Job Creation and MSMEs, Timtola Adekunle Johnson. Mr. Adekunle Johnson appeared on Channel's end-of-year program, says the Tinubu administration is committed to creating an enabling environment for small businesses in the country. Take a listen.
If you check all Mr. President's trips abroad, or even in Nigeria, he tries to chip it in that he is strongly in search of an environment that will be seamless for small business owners to thrive. I mean, it is a no-brainer that we have to create such an environment for our businesses. If not, then we have no business being a nation. Our small businesses must be able to operate on their own. All they need is government's support. So you create the enabling environment for them to survive as a business or as businesses. And that is why in January, before the end of January, MSMEs across the country will now have access to a single-digit loan, a 9% single-digit loan from the Bank of Industry. It means that you can go into the Bank of Industry across the country and get access to a loan. It is a single-digit loan, and we are trying to ensure that this is sustainable. We do not want to start this, and 6 months down the line, it's not sustainable. There is also the 75 billion naira Bank of Industry Fund. It is their own fund. What they have done for us is that they've said federal government is giving out 75 billion on its own to SMEs in the manufacturing industry and in other sectors. They are also giving out 50,000 naira to nano businesses. They've provided 50 billion to those ones. They are saying what we can do to support the government is we have our own fund. We are going to ensure we give it at 9% flat rate to SMEs, 75 billion. By the end of 2024, we want sustainable single-digit loans to be a thing. We want it to be the norm amongst both commercial banks and federal government financial institutions.
Meanwhile, on the same show, economic analyst and CEO of financial derivatives company, Mr. Bismarck Rouhani, knocked the federal government's temporary interventions to support small businesses in the wake of the removal of fuel subsidy, describing the potential impact as insignificant. Mr. Rouhani made a comment on the same show, our year-end program. Take a listen.
In reality, the road to hell is paved with good intentions, right? So the reality is that 75 billion naira, or let's even double it, make it 150 billion naira, in a 200 trillion naira economy, the impact, the materiality is insignificant. The reality is that you must be practical and it must have an impact. The central bank governor was very clear. The primary goal of this leadership is to maintain price stability. The way to maintain price stability is to bring interest rates higher. There will be intervention programs, but the total impact of those intervention programs scattered all over the place will not change the economy. You need investments, right? And investments are a function of savings. Savings are a function of interest rates. So you cannot, on one hand, mobilize savings, which we channeled into investments, at the same time provide facilities at 1/3 the rate of inflation. Inflation is at 30%. So you can't make omelette without breaking eggs. The reality is that there's a time for this. There will be intervention programs to subsidize subsidize productivity and increased output. But the discussion on May 29 was subsidies are gone, right? Exchange rate subsidy, cost-reflective tariff subsidies, and petrol and diesel subsidies are gone. Now, you begin to give people, you subsidize production in certain areas and make sure that output increases.
Well, Mr. Rouhani on our end-of-year program there. So over the weekend, I would see lawmakers in the Senate and House of Representatives pass the 2024 appropriation bill by raising the budget size by 1.2 trillion naira. And the bill passed, a sum of 1.7 trillion was earmarked for statutory transfers, 8.2 trillion for debt servicing, 8.7 trillion for recurrent expenditure, while 9.99 trillion was for capital expenditure. Also at the subnational level, all the states have either proposed or passed a total of about 16.14 trillion naira for 2024. Well, joining us now is Dr. Afolabi Oluokere, Chief Economist, Analytics, Data Services and Resources, ADSR. Great to have you on the show. Happy New Year.
Great to have you, Ladi. Happy New Year, and Happy New Year to our viewers.
Fantastic.
Good afternoon.
Good afternoon. So the budget is passed now and now waiting for assent by the President It did come, as promised in December, but we see the budget was jacked up by about 1.2 trillion naira. Will you say more money to take care of the needs of the populace?
Definitely. I think the populace can do well. So having our budget from 27.5 trillion and now being increased to 28.78 trillion, that's an increase of 1.2 trillion. So that's a lot of money, especially when you are comparing us with what we have done before as a country. So definitely it means more money. But does it really mean more money when you compare to the size of the economy? For instance, this is an economy that probably will be about 220 or more million people next year. We have a GDP that will be close to 250 trillion naira by next year. And we have a lot of people that we have to meet their needs. So by the time you look at the budget and you try to divide it by the number of citizens, as well as expressed as a percentage of GDP, it probably would show that it's something a bit smaller than one would have expected. So we try to do some analysis to look at the budget of 28.78 trillion for 2024, for instance, which has a capital budget of close to 10 trillion, 9.99 something trillion. That is 10 trillion. That's a capital budget. And that is close to about 35% in terms of the share of capital that would have. That is a very good thing, especially if we can spend it, because more often than not, we have a capital component that is about 30% or 31%, but at the end of the day, we only spend about 10 or 15% on capital, because we have a lot of deficits and a lot of capital expenditure often is used to finance it, so that we have less capital at the end of the day. But by the time you look at that budget in terms of how much will go to an individual person, so this is just a rough estimate to say, let's just divide the budget by the total number of persons. For instance, you will see that for the federal government, we are going to have about 126,200 per person in a year. And that will translate to about 350 naira per day to an average Nigerian. And the entire budget is less than 10% of GDP. Is that good? Yes. We are better than where we used to be. But when you compare us to other countries that we can compare ourselves with in Africa, I think we are still far less and lower than them.
And talking about comparing ourselves, comparing Nigeria, there we see budget per person annually. If you break it down, if you put back that slide, 126,000 naira per person. That's if you break down the budget and divide it by the population of Nigerians at this point. So you're estimating that 126,000. If you put up that slide now, 126,000 per person, then daily 344 naira. So compared to African peers, how are we looking?
Not very good. As I said, we are probably better than where we're coming from. But let's just pick some African countries. Of course, when we are doing comparison, it's going to be in dollar terms. Nigeria will probably be doing about $256 per annum per person. I think we are a bit better than Ethiopia. But when you compare us to a country like Botswana, Botswana is way up there. Botswana is doing $2,508.5. $2,500 per person per year, while we will be doing about 256, just 256. So Botswana is actually doing 10 times what we are doing. When you look at South Africa is doing $2,052. So South Africa is about 8 times bigger than Nigeria in terms of budget per capita. And we are not just talking about federal government budget, because more often than not, when you do this kind of analysis, you will say, oh, you're only looking at federal government. We are talking about general government. General government is a consolidated account that has all the tiers of government. So Botswana 2,500, South Africa 2,000, Angola 614, Kenya 486, Ghana 473, Rwanda 286, Cameroon 285, Nigeria 256. So what that implies is that compared to countries that we may also want to be like, even better than in Africa, we still have a long way to go. So government needs to spend more. But there's also a challenge. To spend more, you need to earn more. And to earn more, and I think we can talk to the point that Mr. Iwani made, we need to encourage investment. The private sector must be buoyant enough so that they can also complement whatever the government is doing in terms of its efficiency they spend, so that they can be directed into sector where private sector can come in. Then in the future, government can then start making more taxes and be able to enlarge the size of the budget going forward.
Okay, all right, Dr. Oluokere. Now, so let's talk about the adequacy of Nigeria's budget. The numbers are bigger, compared to 2023. But how does, inflation, currency devaluation, play into this 28 trillion naira budget? Is it, in your opinion, a high budget?
So, in nominal terms, it's high budget because when you look at nominal change over 2023, we are talking of about 16% increase. 16% nominal increase. That's a lot of increase, right, for a country to make, even though that may not be sufficient to move the need to the kind of thing that Nigeria may require. But when we try to adjust that for inflation, and this is not just inflation that we are currently experiencing, for inflation expectation. In other words, we are likely to see something lower. If CBN is trying to reduce inflation, if everybody is trying to reduce inflation, we should have a projection of inflation that will probably be about 20 to 23% next year on the average. By the time you net that from the 15.9%, then it's going to be a minus 7%. So in real terms, in other words, when you adjust our budget for increase in prices, general price, that is inflation, the FGM budget for 2024 will represent a decline of 7% from the 2023 value. And as we all know, real changes are the things that will have impact on people, not really nominal. If prices increase and you also increase the expenditure, you may still not increase anything because people don't, if you double my salary and you also double prices, I'm still at the same level of welfare. So in other words, when we look at inflation, the budget of the federal government has not actually increased, it has actually declined by 7%. Right. But when you look at it in dollar terms, that's a different ballgame. We're actually back to around 2008, 2009 in terms of dollar terms. Sometimes I don't want to say a lot about dollar terms because some people say, do we spend dollars? But what is important is that comparatively, if you want to compare with other countries, you're going to use dollar terms, then to show that our budget is far lower than what we've been doing in the last 10 years.
Right, because we have too much naira chasing dollars at this point. But let's look at the subnationals now. They've also passed or in the process of signing their budgets into law. The states in Nigeria total budget amounts to about 16.1 trillion naira. Give us a sense of what your data is saying about the state budget and how it compares to 2023.
Okay, thank you. So, for what you said, 16.1 trillion, that is what we currently have. All the budgets, almost all the states have presented their budget. About 30 to 34 of them have actually having passed by the National House of Assembly. About 5 to 6 of them have actually signed it into law. So 16.1 trillion is actually also a lot of money. And the capital component is about 9.7 trillion. That is almost 60% of the total budget. So when you compare what the subnational are spending on capital or are proposing to spend on capital, it's almost like twice in terms of proportion compared to the federal government. So federal government has a budget of 28 trillion and it's going to be spending about 10 trillion on capital. State governments combined have budget of 16.1 trillion and they are also going to be spending almost 10 trillion on capital. So they are spending a higher proportion of their budget on capital. Efficiency is another issue. How that is done in terms of actual is another issue. But when you also divide that by the respective number of citizens in each of these states, so what we did was to also look at projected population for all the 36 states and see what would that amount to. So that will amount to about, on the average, 72,600 naira per year per citizen, and that would be about 198 or less than 200 naira per day per citizen. And the ratio of state budget to GDP is estimated at about 5.5%, while that of federal government is estimated to close to 10%. And then when you compare that with what they did in 2023, they are having about 46.6% increase. That's a lot of increase when you compare that to the federal government. I mean, there are states in Nigeria that are also even doing more than 200% increase in terms of their budget. I mean, those are details will tell us how they are going to finance such budget when we want to more than double what they did last year. But when you adjust what they are doing for inflation, because most of them are increasing significantly, it shows that in real terms, state budgets are increasing higher than inflation in the respective states as against the federal. What I just said now varies across states. There are states where in real terms, the budgets will be lower than that for 2023. There are states where the budgets are far higher than 2023. And so in some of the things that we do, we try to compare different states. I'll give you an example, for instance. Lagos State will propose about 2.2 trillion, 2.25 trillion. That's a lot of money. I mean, the one that is closest to that is Rivers, which is about just 800 billion. So Lagos State is almost 3 times higher than the next state, which is Rivers. But when you compare that per citizen, it then shows that that figure may not be that high because the population of Lagos is very big and the GDP of Lagos is also very big. But there are also states that are not going to be spending a lot, but when you compare that with their level of GDP as well as the population, maybe Bayelsa, for instance, and when you look at the number of people that are there, budget per capita can be far higher than places like Lagos. So it varies across states, but what is important is that federal government is increasing, but states are increasing more. In real terms, states are positive, federal budgets are negative, but the situation varies across states.
Right, so much to unpack there. Definitely, we're hoping the budget actually meets expectations going into 2024. We can fund it with as much little debt as possible, or cheap debt, and we use that money well, no matter where it's got from, even though it's cheap debt or expensive, we use it to actually get the goals that we need to get this country to a $1 trillion economy. Thank you so much for coming on, Dr. Afolabi Olowokere, Chief Economist, Analytics, Data Services, and Resources, and Happy New Year to you again.
Happy New Year, and have a great and prosperous day.
You too. Thank you. All right, so next, definitely 2023 was quite a struggle, and with the cost of living crisis and all of that, going into 2024, we need to be guided, at this point. So we're going to be getting some personal finance tips for 2024. That's our next conversation. Do stay with us. Well, it's a brand new year. First trading day of the year kicks off for most markets. We track that tomorrow. But now it's time to plan your personal finance for the year to make sure you meet your financial goals for 2024. Join us now for this conversation is Oladele, founder, Money Wit Club. Join us via Zoom. Great to have you on the show. Happy New Year.
Happy New Year to you too.
So 2023 was quite the year for many. Cost of living crisis, high inflation, currency devaluation, but at the end of the day, most were recommending to stay off risk assets, but we see risk assets paid off generously in 2023. What do you think should be the plan when it comes to planning your personal finance in 2024 and investing your way out of poverty?
Fantastic. Thank you for having me, and Happy New Year once again. So yes, risk assets did quite well in 2023. However, you always have to remember that high risk is high return is a reward for high risk. What that implies is that people took risk, and there was a chance that it didn't go quite well. Right. So when planning your finances, I always recommend that you split it across both risky and low risk, so that if there is a shock, you are able to accommodate it. Right. So when we say risky assets paid off, we forget that there are risky assets that did not pay off. There are portfolio companies, venture capital companies that shut down. A lot of them shut down in 2023, right? We also know that not all the stocks in the market did well. Some companies left Nigeria. So when we say risk assets paid off, it's a generalized statement. People lost money at the same time. So it's important to bear that in mind when we are thinking about taking risk, such that you put a pause or you slow it down. You don't just go entirely all risk. You manage between risky and non-risky assets.
Should be the key takeaways from 2023, talking about lessons learned, at this point, because you did mention some, risk assets did badly, in 2023, and it's not easy, finding the winners. It's more in hindsight. You come out and you see that, oh, this one did very well, wish I had invested, or maybe we're lucky to actually invest and make returns. But what do you think are the key lessons learned from 2023?
The first lesson I would say everybody's take up was that the economic environment matters, right? Most of the investments that did well were positioned to benefit from the economic environment. The ones that were not positioned or their business idea structure was not positioned for the environment shut down. And that is the reality, and it's a global reality. So when you hear farmers say that, we had to wait for planting season, or planting started late because they had to wait for the rains, or maybe depending on the crop, they had to wait for the rains to stop, right? It's because they understand the place of the environment in their farming process. And I think we need to take investment from that approach, meaning that if you are going into an investment, the first thing you need to also, apart from the viability of that investment, the environment walking into, will it support this type of investment? If it won't, for any reason, then you can almost tell that if you give it time, that investment is going to go bust. But if you have an investment, for example, that is aligned, that is providing a solution, for example, if you think of the platform we are using to dive in a situation of a pandemic when nobody's moving around, we understand that business is viable, and everybody's going to keep paying for it, even though the economy is hard. Another thing that we needed to learn from 2023 is that there will always be shocks. No matter how much you plan, there will be things that you cannot anticipate that would happen. Why do we say that? Because things happen that nobody foresaw. Right. But the thing about it is that you have to accommodate it. You have to position yourself to either hedge yourself, meaning that the impact will not affect you, or you position yourself so that that wind blows and lifts you higher. But if you can't position yourself to benefit, the best you can do is have some kind of shock absorber or insurance system, or your portfolio is structured so that if one is good and if one is bad, the other one will be good to accommodate the shocks. But those are two major things that I think if we carry into 2024 and our decision making, our personal finances is better off in the year.
And looking at 2023, we did see there was a lot of gambling. We see a lot of youths there went to the gambling houses to try and make money to sustain, their lives. And also the loan apps too came in handy. But we saw a lot of people overborrowing, even though they couldn't pay back. And we saw the loan apps, going after them, shaming them, and all of that. And everybody, looking for that winning game that would make you all the riches, betting on sports and all of that. What do you think individuals should do in 2024? There are some of them that are hooked on gambling at this point and taking up all these loans. What's your advice for them?
Of course, gambling is those things that no one really recommends. If you want to go on the path of gambling, then you should cap the amount you put into it. Because you would say don't gamble. Of course, people would always want to try their luck, which is understandable. Such that if you decide that you want to go gambling, cap the amount you're going to put into it. And now when it comes to loan sharks, it's one of those things where you have to plan. We have seen the inflation of 2023. If it continues as is in 2024, the fact is it's no longer a shock. What are you doing to accommodate it? There's no longer, I talked about shocks, but it's no longer a shock. This is where we are. This is what we are in. So how do you plan ahead to accommodate it? How do you position yourself to have emergency funds? What can you do to make more money for yourself? What can you do to reduce the risk of your investment so that you're not going from 100 to 0 in one investment opportunity? Those are the kind of things that we need to be considering when we are positioning ourselves for this year. The loan sharks are there to make money, and they will give you, knowing fully well that you probably might not be able to pay back in full, but taking a gamble on the fact that they have a way to get that money out of you, however, right, and declare their profits. But you as an individual, you're responsible for your finances. So we've seen the shocks of 2023. It's no longer a shock in 2024. How do you make adjustments to accommodate the new prices?
Right, definitely a lot to think about there. And I guess if you're going to gamble in 2024, have a budget, cap it, and don't go above it so you don't end up gambling all your money. So, well, we're here now. What are you seeing coming in 2024?
So for 2024, I get on chat the budget, the economic environment, economic direction that the regulators and the government is setting for us. The fact is, as I said, the environment will determine what will thrive or not. So if you, for example, are looking for where to invest your money, right, what you should be looking at is what sectors of the economy are going to be funded, what sectors of the economy are either resistant or defensive, such that no matter what happens, people would always pay for these things. They are necessities, right? You need to be strategic about investment decisions. That's on one hand. But even in terms of spending and planning, right? We can't continue like there is no challenge at hand. The fact is that prices have been rising for a bit, and there appears to be nothing that is going to slow it down in the short term, at least between now and H2 2024, right? If you bear that in mind, it means that what you can pay ahead to lock in a price, consider that if you have ability for it. However, you can hedge yourself, because I mean, paying ahead is a hedging strategy. How you can hedge yourself the rising prices, whatever you can adjust in your finances, right? To make sure that you are secure, your bills are covered, so you don't get into the loan shark story. Those are the kind of things that people should be considering, because we can't see that the economy is not looking great. GDP is going to grow slower than our numbers as a country. Then you now sit down and not do anything. The question is, what can you do to hedge the impact on your finances? One, and two, what can you do to position yourself to benefit from the growth, however small it is, the growth that we expect?
Thank you so much. It was great having your perspective today, Ola Oladele, founder of Money With Club. Thank you so much.
Thank you.
And Happy New Year. All right, so talking about investing, we have Willibong with the details right here, looking at the market. And Will, you did hear her. She says, if you're going to gamble...
Happy New Year, laddie. First of all...
Happy New Year.
Yes, laddie.
And if you're going to gamble in 2024, put a cap on it.
Yes.
And if you're going to go to the loan sharks, make sure you can afford that loan.
Yes.
And if you're going to invest,
make sure you're going to make returns. Don't put it in the riskier assets. Just know your risk appetite and be able to, get that return and put the money in the best place. Especially safe assets are good.
Right.
Just let's think of the safe assets.
Do we do mini, mani, mo?
No, no mini, mani, mo. You need to know where you're putting your money. Do your
wait
research.
For some divine, inspiration
just do the
to
research.
Find those winners in 2024.
Well, we already have our winners for 2023. We just have to do the research and find the potential winners for 2024. Well, our guest is probably going to give us insights into that.
Exactly.
But let's just, the equities market really did really well. The NGX was one of the top performing stock markets globally. It's ranked 7th in the world, and it's phenomenal to know that the NGX still outperformed despite the economic headwinds in the country. Now, the NGX ASI ended 2023 45.9% up, but we're going to bring in Mukhtar Mohammed, the CEO of Finance with Mukhtar, to give us more insights as to why the market performed so well, and if we're going to see that same performance in 2024. It's looking like the market, some analysts are telling us to tread with caution, that there will be risk-off mode and not risk-on, because the economy is not going to be smiling. But Mukhtar, good afternoon. I know today happens to also be your birthday. Happy birthday, first of all, and Happy New Year. Can you just tell us what to expect, why the market performed so well in 2023, and what we should see for some stocks?
Thank you so much, Will, and Happy New Year to you and Ladi there in the studio. Thank you for having me on my birthday. So it's also a pleasure to be on your program. Well, 2023 was a fantastic year for every investors in the equity market. Like my colleague that just finished an interview said, depends on which side you were in the equity market, which stock you were, which risky investment you were. But generally it was a bullish year for the equity market, and as will that bullishly continue in this new year? Well, it's subject to a lot of factors. One of those factors is a stable exchange rate. Are we going to attract foreign direct investors, portfolio investors? Are they going to come to the market? Is the market overpriced? I think that's where people are saying, oh, the market needs to have to come down. And they think about what happened before, maybe 2008, because most of the stocks are selling at higher like what they were in 2008. But what people have failed to realize is that the companies, in terms of results in 2023, were fantastic results. First, second, and third quarter. We're still expecting most of these companies will be paying dividends, and the PE ratios are still very, very low. So there's still a lot of opportunity for the upside, especially in the financial stocks. So nothing to worry about, just like the financial advisor said, know your risk appetite. But then I think the stock market was one of the best last year. Beat inflation by almost 15%. If you, like you said, we closed at about 45% higher. And I'm surprised that we are the seventh performing market. I thought we should be the first performing market in the world. Well, all the way we take seven if we have gone from the worst performing to seven best performing market in the world. So it's fantastic.
So let's look away from the financial stocks right now. Look at some of the stocks that saw significant gains in 2023. Let's look at Transcorp, for example. Transcorp Hotels saw over 1,000% growth. And if we had invested, from research that had been carried out by the NGX and Nairametrics, so that if you invested 1 million in Nairametrics at the start of January 2020, in Transcorp Hotels, you would have gained 11.2 million naira. And Charms, if you look at Charms, we see that it had over 795% growth. And if you had invested 1 million, you'd have had about 8.2 million naira. Transcorp, not letting go there, is also in that league, 666% up, and you'd have had 7.6% growth if you had invested 1 million naira. So, Mukhtar, tell us, do you agree with these numbers, and what would you advise investors at this point? Did we lose out, those who didn't invest?
Well, you didn't lose out. Like I said, there are also opportunities in other sectors. I'm looking at these stocks also. When you talk about those numbers, it beats me to see those stocks really did very well. But again, you must look at volume. You must look at liquidity. Most of these stocks that you're talking about, in terms of volume and liquidity, you realize that they weren't really moving that much, exception for Transcorp, not the Transcorp Hotel, Transcorp PLC, that you had volume. In terms of others, you had very low in terms of volume availability for investors. So most investors were not even there. Remember, most of the stocks you are saying about are stocks that have not given investors high return. Any investors you have told at the beginning of the year that this is the stock to buy, they may not have even looked at that place. And again, when you look at some of these stocks, the numbers does not correspond with the prices that they are selling at the moment. So, but in a way, it was a gambling, and it was a good gambling for those that were able to play it at that time. But again, it's still a call for cautious if you think that numbers will still go, because there's always a say that we say that at a point in the market, fundamentals will come to play and price will normally come to where they belong. And when the market has a shaking, those that have artificial price movement are actually the ones that really suffer for price depression. So definitely, it was a good one if you have invested there, but all the same, I think you should trade cautiously, because you must have invested there and you're not able to sell at when you want to sell. So, but all good and fine. I think it was a good year for those that are invested in those stocks. Going forward, it's going to be a very fantastic 2024 for investors in the equity market. I keep saying it. But you must invest with caution. You must look at your risk appetite. You mustn't even look at the numbers that have gone, or you must look at the fundamentals of the stocks that you want to buy in 2024. But like I say, 2024 is still going to be the year for the financial stocks, especially with what we are expecting from the government in the area of, from CBN in terms of recapitalization of the banks. So you still see the financial sector drive the market. The consumer goods sector will come to play, because from the president broadcast today, we may be having, he was promising to pay living wage, and once start paying living wage, remember, Nigeria is a consumer-driven economy, then those sectors will begin to strike all over again. So if you ask me, then again, the oil and gas sector, you must look away from that. We will see some big movement. We are hoping to see this year. We're hoping to see NNPC Nigerian Limited We're hoping to see Dangote refinery also comes to the market. That will really dip in the market.
Okay.
And so that sector could be one sector investors should look into.
All right. Oil and gas, Dangote Cement coming on board. Market's going to get an explosion. Thank you so much, Mukhtar Mohammed, Finance with Mukhtar, for sharing your perspective on Business Incorporated.
Thank you for having me, and Happy New Year once again.
Happy birthday once again. Enjoy the rest of your day.
You too.
So we go now to Ethiopia. Other markets are emerging as markets of, getting their worst performances, getting the best performances. Ethiopia is setting up. In May, they announced, the first exchange in the country. Beats me. They didn't have an exchange for this long, but they're starting one now. They're launching one very soon. And we're bringing in, the market is going to kick off this year. I think it's going to kick off this year. And so we're bringing in the market analyst from that country. Is going to be giving us what to expect from the markets, especially now that Mr. Tilahun Kasahun is the Chief Executive Officer, Ethiopian Securities Exchange, ESX, is going to be talking about what we should expect from the Ethiopian Securities Exchange. It's quite historical for the country, the first exchange, and want to see what they have in store for investors. Good afternoon, Mr. Kasahun. It's good to have you on the program.
Thank you for having me. Happy New Year.
Happy New Year to you too. Ethiopia is setting up its first stock exchange. Why is it coming this late? Because everyone's wondering, one of the largest economy in that region, and why now?
Thanks, a very good question. In fact, I think we tend to believe that we're one of the largest economies in the world without a proper securities exchange. Although we had a sort of stint in the development of proper capital markets in the early 1960s, same time as Nigeria started one, but unfortunately due to various regime change, we kind of, had a big gap. And since 2019, various, policy reforms, legislative reforms, and institution building activities have been undergoing. And within a span of, 2 years, we set up a new capital markets law. A capital markets authority has been also set up, and our securities exchange is being set up as one of the only stock exchanges in Ethiopia with government and private sector participation. Obviously, I think the why now is very much self-explanatory. The Ethiopian economy has been growing with double-digit figures for the past 20 years. The economy has kind of, really run out of its own, steam in terms of financing itself through the usual government-heavy methods, right? So the appetite to raise private sector finance, the appetite to raise foreign investment, both in the form of FDI and also through the securities market is there. And obviously, a very reforms government since 2018. And also, although we do not have regulator market, we had what you call very much, literally an OTC market going on. We had more than, 40 banks and insurance companies that are literally set up as a public company. They traded their securities on an OTC market. We have currently about 400,000 shareholders that are exchanging their securities in a very much informal manner. So really, the stars were aligned for us to come to market right now and perhaps this year.
That's fantastic to know that trading was already going, as we mentioned, informally, so this is just a formal setup. But what makes the ESX different? Can you highlight some of the opportunities for investors that probably want to come into the market now that the exchange is about to kick off?
Thanks. Yes, so good question, right? So the value additions of securities exchanges is today very much obvious. We create transparency, organization, protect investors, and also efficiency of the market. So, it takes between a day to 30 days for one investor to change its securities in the current OTC market. People have to literally go to share registered departments of these banks to exchange securities. So we will reduce that to a couple of seconds via modern technologies. Today, you should be able to trade any security within a matter of seconds. Of course, beyond technology, it's good to be a latecomer. It's good, it's interesting to mention that we've been in Nigeria and Lagos visiting both the Nigerian Stock Exchange, FMDQ, and also the other stakeholders in the market. And alongside most visits that we did throughout Africa and the world, there is a lot of lessons to be taken from the development of capital markets in these exchanges. One of which is to create the right environment to build an exchange that caters for both equities and debt, and as well as other modern securities. And as you know, as a latecomer, ESX will have both an equity market, a debt market, and also an OTC exchange. So in a way, we're kind of merging your three exchanges, the ones that you have in Lagos, and many more lessons to be learned from other African markets.
So definitely the ESX, in translation or in summary, you've kind of leapfrogged, just moving to all the exchanges and incorporating all this in the exchange. This is very fantastic, and we look forward, especially investors will look forward to how they can invest, because you did mention that you're open to foreign investors. So we look to see maybe the cross-border transactions between Nigeria and Ethiopia, investors here buying shares from Ethiopia Stock Exchange and seeing how that works out. We wish you all the very best, and we look forward to when trading begins. Thank you so much, Mr.
Thank you very much.
So we're just seeing that exchange. We can't wait to have the Ethiopian Securities Exchange kick off and markets starting in full speed. But we're just going to quickly wrap up and see what the the EGX, that's the Egypt Exchange, the performance for last year. They opened January 2023 at 10,200, and that's the Abu Dhabi, right? Abu Dhabi opened 10,250 in January, and as of December 2023, it closed at 9,577 points. It had a depreciation of 6.2%. And also great performance for 2023. Let's look at the next slide. We see the Dubai Exchange performance was fantastic, though, 21.69%, but not so great as the NGX, but really good market rise there. We see it open at 3,273 points, and as of December 2023, it closed at 4,059 points, and that, I say, is not, well, let's say it's a marginal rise, not so great as when you look at compared to other exchanges in the world. We look at the EGX 30 in Egypt. It had a phenomenal growth for that matter. It opened in January 2023 at 15,978 points. At December 2023, it had a close of 24,832. Originally hit the 25,000 level, 25,000 points, but it did drop in the last trading weeks of December, and that brought it back to 24,000 level. We're hoping to see more fantastic performance from the EGX 30 and probably from other stock markets. Now let's look at the US very quickly and see how they traded. Wall Street, they had their best performances for the past 3 years, since 2020. They've not seen this performance before. Stocks fell on Friday, but the S&P 500 closed out 2023 with a surprising gain, 24% up despite inflation. We see that up 24%, and the Nasdaq up to 43.4% in 2023, and the Dow Jones Industrial Average closing the year fantastic, 13.7% up, all closing strong despite inflation, despite all the hikes and everything going on. Investors, it was based on the artificial optimism for artificial intelligence.
Right.
Actually rose, pushed the Nasdaq up, and all the blue chip stocks were, rising on that optimism that AI growth was going to, boost the economy, and that we see the market performing so well.
Looking forward to what happens in 2024, and very interesting in East Africa, the Ethiopian Exchange, first time. I wonder what it feels like, investing in a recently or a newly launched exchange. That'll be quite interesting to see, but we'll keep tracking that. Thank you so much, Will, for giving us the updates there from the global markets and the local markets right here in Nigeria. Let's get a sense of what's happening now. We see in crypto there, let's get some news first. In Africa, they'll see consumption tax growth in Kenya has hit an 8-year low with a meager 2.8% expansion in the third quarter of 2023, according to data from the Kenya National Bureau of Statistics. The sluggish growth is attributed to restrained spending amid inflationary pressures and increased taxation. KNBS defines taxes on products as those payable per unit of goods and services produced, encompassing value-added tax, excise duty on airtime, taxes on beverages and tobacco, and taxes on petroleum products. All right, straight to the crypto market now. We see Bitcoin, starting 2024 range bound at this time, but it's in the green there for $3,032 for Bitcoin. We see big pockets of red on the screen, a few pockets of green this time, starting off 2024. Let's look at the sentiment to the market now. We see it's still a greedy market, but less than what we're used to, 65 points there for the fear in greed index, showing how investors feel in the market. So we're still seeing a greedy market, but less than what we've been seeing so far. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume. Happy New Year.
Happy New Year to you, Ladi. It's my pleasure to have you here again.
Yeah, great to have you, Rume, as always. And definitely, we're seeing Bitcoin starting 2024 range bound at this time. Do you think the bulls are going to come up on top in 2024?
Yes, 2023 has been very challenging, quite well. A whole lot of things happened. You saw firsthand when Bitcoin started 2023 with 16K, which was very terrible at some point. But we saw pockets of things that have changed. 156% gain in 2023. Market sitting very well. $831 billion market capitalization. Although setbacks came in from SEC attacks, countless hack, ETFs application, lawsuits striking Binance and some other exchange platforms, as well as lawsuits against CZ, which is the CEO of the biggest crypto exchange platform in the world. We also talked about WorldCoin that came up at that point in time. So it's been worthwhile. A whole lot of things became clear. We also saw the implementation of so to say, marketing crypto asset in MiCA bill that became a law, which will take full effect from 2024 right now. So it's been a very good year. Hopefully, a couple of things also that a lot of people are failing to consider, which I also like to put forward, the macroeconomy, which is also affect the entire crypto market, right? So it could be a way on a side which can make the market move sideways, yes.
Okay, and I guess investors now are wondering what to do in 2024. We've seen Bitcoin had a great year in 2023, about 150% gains, and we saw the meme coins also give thousands and thousands of X's in the market. What are you seeing for 2024? Should investors be coming in or going out?
So 2024 is also a year where you have the U.S. elections, and most likely things are usually not in the come-buyer moment, if you ask me, right? So, but looking at the situation whereby the ETF is already a narrative, Bitcoin halving is also coming, so we might have new persons coming to the market, yes, but 2024 is going to be very big for crypto, but again, at the beginning, we must also see some bumpy ride, but investors need to be careful. But a long term, very, very, very positive about it this year. After half, usually we see the culture, but at some point it might be not exactly the way we see it, because the dynamics has to change right about now.
All right, we'll see if Rume will remain the bear. I call him Rume the bear. Let's see if you remain bearish in 2024. Thank you so much, Rume Ofi, financial market analyst.
Thank you very much, Ladi.
All right, so that's the show today. And yeah, remember, as I said in the beginning, it's Business Incorporated. It's now from 1 p.m. to 2 p.m. Weekdays. We've absorbed Business Morning into this time frame at this point. So tell your friends, tell your business associates that Business Incorporated as 1 p.m. to 2 p.m. Weekdays. Thank you for watching. Don't forget to join, go to www.channelstv.com for more updates. And remember, if you must take profit in 2024, find the top. Bye-bye.